Gold retakes $5,000 as geopolitical risks boost safe haven demand and counter USD strength. Gold gains some positive traction for the second straight day, though the upside seems limited. Geopolitical risks drive safe haven flows towards the precious metal amid subdued USD demand. Wednesday's hawkish FOMC minutes favor the USD bulls and might cap gains for the commodity. Gold retakes $5,000 as geopolitical risks boost safe haven demand and counter USD strength. Gold gains some positive traction for the second straight day, though the upside seems limited. Geopolitical risks drive safe haven flows towards the precious metal amid subdued USD demand. Wednesday's hawkish FOMC minutes favor the USD bulls and might cap gains for the commodity. Gold retakes $5,000 as geopolitical risks boost safe haven demand and counter USD strength. Gold gains some positive traction for the second straight day, though the upside seems limited. Gold XAU/USD attracts some buyers for the second consecutive day and climbs above the $5,000 psychological mark, closer to the overnight swing high heading into the European session on Thursday. The third round of U.S.-mediated negotiations between Ukraine and Russia concluded in Geneva on Wednesday without any major breakthrough. This underscores that substantive disagreements remain over the status of eastern Ukrainian territories occupied by Russian forces. Furthermore, reports suggest that the U.S. military is ready to attack Iran as early as this weekend. Although U.S. President Donald Trump has not made a final decision yet on whether to authorize an armed confrontation, this keeps geopolitical risks in play and underpins the safe haven commodity. Meanwhile, minutes of the U.S. Federal Reserve's Fed's January monetary policy meeting released on Wednesday showed that policymakers remain deeply divided over the necessity and timing of further interest rate cuts. In fact, several Fed officials indicated that more rate cuts could be warranted if inflation declines as expected, while others cautioned that easing too early could compromise the central bank's 2% inflation target. This followed the upbeat U.S. data, which showed that industrial production increased more than anticipated in January, and manufacturing output rose by the most in 11 months, backing the case for the Fed to hold interest rates steady. This assists the U.S. dollar, USD, in preserving the previous day's strong gains and might keep a lid on the non-yielding gold. This, in turn, warrants some caution for aggressive bullish traders and makes it prudent to wait for some follow-through selling before positioning for a further appreciating move for the XAU/USD pair. Traders now look to Thursday's U.S. economic docket, featuring the release of weekly initial jobless claims, the Philly Fed Manufacturing Index, and pending home sales data. Apart from this, speeches from influential FOMC members will drive the USD and the gold price later during the North American session. The focus, however, will remain glued to the U.S. Personal Consumption Expenditure Price Index due on Friday, which should provide cues about the Fed's rate cut path. This, in turn, will drive the USD and provide some meaningful impetus to the precious metal. Gold bulls have the upper hand as 100-hour SMA breakout remains in play. The commodity now seems to have found acceptance above the 100-hour simple moving average, though the overnight failure to find acceptance above the $5,000 mark warrants caution for bullish traders. Moreover, the 100-hour SMA slopes downward, underscoring lingering bearish pressure. Moreover, the moving average divergence line has slipped below the signal line near the zero mark, and the histogram turned negative, suggesting waning upside momentum. The Relative Strength Index, RSI, prints at 59, neutral, reflecting balanced conditions after the earlier overbought stretch. The 100-hour SMA at $4,956.71 serves as immediate dynamic support. Despite its decline, the SMA continues to support the intraday structure as long as the XAU-USD pair trades above it. A bullish crossover in the MACD and a sustained move back above zero would improve momentum, and an RSI push through 60 would reinforce follow-through on the upside. Conversely, a close below the SMA would hand the initiative back to sellers and expose the risk of a deeper